Hello, welcome to this podcast on Professional Fees Calculator. I'm Peter Towers, Managing Director of ESS BIZTOOLS, and this is the ESS BIZTOOLS podcast. Professional Fees Calculator. In the first instance, I think accountants should be using a product like this for their own firm to start with. We based our charge out rate calculators on the original work done by the Financial Management Research Centre at the University of New England. And with their permission, or the FMRC people's permission, we adapted that product to be the product which we've now got available within ESS BIZTOOLS. Accountants should, I think, undertake their own analysis first and then look at offering services to professional service firms. And there's thousands of those around Australia. And on my reviews, a lot of them miss some of the very important facets of determining charge out rates. When you look at determining charge out rates, cost is not the only factor that clients worry about. We all know of situations where some people seem to charge a lot of money, but what gives them the ability to be able to get away with charging those higher fees? And we're going to explore some of that in this conversation with you. Other people think that low price fees are more successful in a recession, or it's best to set your charge out rates as the same level of your competitors. And that statement takes no account of what the competitors' overhead costs are or other factors, what salaries they're paying to their people. Price low to gain market entry, and once market entry has been obtained, increase your professional fee rate. Ask your clients what the rate should be and then charge them that rate. I don't agree with any of these, and that's why I call them fallacies. Experienced clients and patients dealing with any type of professional will be looking for other factors. The quality of service, the greeting. It all starts with the reception desk, doesn't it? The receptionist should be the director of first impressions. What sort of message does the receptionist give to a visitor? Is the office tidy? Is there some decent reading material available? Or is it the newspapers that are 2.5 weeks old? Have you asked someone to act as a phantom client and reviewed the summary of their experience? Again, I'm following through on the theme that accountants in particular should start with this exercise for their own firms. What technical and backup service does the firm have? What empathy do they have with clients? Have they got handout material? And this is one of my biggest areas of concern with professional service providers. Do you have it? Is it up to date? It's like websites that have got material on there that was published 2.5 years ago. Doesn't take much effort to change the dates to indicate that it's still current, or to remove it if it's not current. But handout material can be articles of interest for your clientele. And in an accountant's firm, it could be research and development articles, overcoming funding difficulties by raising capital from the public. It's amazing. We've had crowdsourced funding equity raising for nearly 8 years. And it's stablemate, early stage innovation company, capital raising, yet a lot of people in business do not understand that it's available to them. Not everyone's going to want to use it, of course, but I think everyone in business should have an appreciation that they could raise capital if they wanted to. And if you had a discussion with those ones who just shake their heads, perhaps by talking to them, explaining to them that this is how businesses are really created. Just look at the stock exchange. Just look at the whole history over the last 400 years of English exploitation and then American developments of companies that all grew through people becoming shareholders. So what's the knowledge of the client's industry that you have and the supplying the type of the service that the client wants and needs? So services are very important. I think many clients are expecting their professional advisors to offer them sound business advice, well beyond normal, let's call it compliance issues. We're accountants, so we're talking, I am comparing accountant services all the time here. This is an important position for accountants, but how does it apply to your other professional clients that you might be advising? Whether they're medical specialists, whether they're lawyers, whether they're barristers, whether they're software producers, you know, other professionals. What's important to them? I think there's an expectation that professional advisors supply add-on services, brochures, booklets, newsletters, conduct seminars and webinars to keep people informed, especially if they want to charge the top fees. The firm must offer services over and above the normal for run-of-the-mill compliance services or whatever that is for your clients. For accountants, I think it is, how does services being provided compare to compliance services, taxation issues? I think professional advisors could work towards gaining a reputation through the writing of articles in magazines that clients or potential clients read. They might consider accepting speaking invitations at seminars, Rotary Club meetings, other club meetings and other events to present a human face of your firm. You gain experience from undertaking these exercises, because if you're going to stand up in public and talk to 20, 30 or 100 people, you'll definitely know your subject, won't you? You'll study it, you'll read it, you'll practice presenting it 3 or 4 times. And that is a great way to enhance your reputation in the marketplace. And why am I talking all about reputation and articles and marketplace? It's because that could enable your firm to be able to charge a premium on the services that you're charging for. And obviously, I'm also trying to convey the message that if you're advising a professional service firm client, these are the sort of issues you could bring up with them. What are they doing about all the issues I've just spoke about? Articles, promotion at Rotary events and other things. How good's their website? Is it up to date? Do they produce a newsletter frequently, monthly, say? Over the years, I've given specific advice on what we might call soft selling techniques that we've just been discussing to a number of professionals, some of the ones that I can readily recall: real estate agents, medical specialists, a few of them, dentists, solicitors. One specialist said to me once, you know, I've spent nearly 10 years of my life since I left high school in universities and medical training schools all over the world, and no one really taught me how to run a business. No one taught me how to write up cash book entries. No one taught me about self-promotion and marketing. Yet I'm now deciding I need it, because I'm up against a new generation of younger people coming through who are very familiar with social media and marketing tools. And they're producing brochures, they're producing articles. They're quite happy to turn up and speak at a Rotary Club event on something new. That's how you need to be thinking, I think, when we're talking about setting charge out rates for a profession. It's just not a mathematical exercise. You can add a premium into the calculations to cover these extras that you think your client might be able to charge. So let's look at what else we can do. I think I like to have competitors' files because you can, if you sit down every couple of months and have a look at the file you've kept on a competitor, so every time you saw an article in the media that they were quoted in, cut it out and put it in the file. If you happen to get some information that someone sent to you or see something on the internet, print it off if you can, put it into your file. And then every few months, sit down and just review those key competitor files. And I'm assuming for most professional firms, it'd only be half a dozen at most. And analyse them and try to work out what their what your competitors are trying to do. There's no rule that says you can't copy those type of strategies. It might give you some forewarning. Gee, someone's been off doing a whole heap of work on raising capital for private companies. It's obvious in some of the things they're saying. So they're going to be going into the marketplace in our community, talking about Section 708 capital raising, early stage innovation company capital raising, crowdsource funding equity raising, venture capital extra raising. And they're going to be promoting those services and trying to get the clients who are trying to scale up their business operations. But let's come back to what we're really here for. We're advising professional firms on how they set their charge out rates. How does this apply to your client that you're working for? How do they differentiate their services? And in differentiating, are they able to charge a premium? I think it's very beneficial to understand how your clients figure where they sit in the pecking order, in their professional colleagues. So again, coming back to the example of an accounting firm, I've said, okay, if your firm is going to deliver, and the emphasis is on the word deliver, advisory services to SME clients, how would you differentiate the charge out rates that you think your people should be able to earn for the firm as compared to a firm that is only offering compliance type services, bookkeeping advice, business activity statement preparation and lodgement, and income tax returns? Now, that's no reflection on those firms, the way I've said that. I hope you're not interpreting that. I'm just saying they're a standard model. But if you've gone to the expense, and it will be more expensive to become involved with a firm like BIZTOOLS, because we produce material that you can use so you can deliver advisory services, and there is some training and preparation time, and all this costs money. You should be able to charge a premium on what that firm just delivering taxation type services is able to charge in the marketplace. And you need to communicate this. Now, you don't say, oh, that guy down the road's only doing taxation. That's not very nice. But you produce brochures, and on your website, you'd be emphasising that you're offering advisory services. You're helping SME clients survive in business. So what I mean by that is you'd be offering a virtual CFO service if you do everything that I'm now going to share with you. So we start off with a business due diligence review that you undertake for your clients. This is what you'd be saying. And you're looking to see what your clients, running a professional firm of some sort, what sort of services are they offering to their clients? And can they charge a premium because they've factored those services in? So I've got on my list the business due diligence review. This is knowing your clients 1 inch wide but a mile deep. That if you've heard things that I've been talking about for the last 2 years, we've been emphasising that point. It's very important. You need to really understand your client's business. The business plan preparation, a vital document, but not the same as the other one you did last year for somewhere else. It should be prepared with the leadership team so that you get their input, because at the end of the day, they have got to have ownership of this document because they are the ones who are going to implement it. And then we can move into the predictive accounting reports, which is basically the financial interpretation of the business plan. Budgets, key drivers, that's the debtors, the inventory, the creditors, and research and development activities, those key items that shouldn't just get hidden somewhere in between the balance sheet and the cash flow, or it needs to be clearly identified so people know what the investment in those items are. And then we go into the cash flow forecast, the projected balance sheet, and the fund statement. And then we move into what we're calling the 52-week business enhancement service, because I think this is vital if you want to differentiate your services. So it's daily, weekly, monthly reports, exactly what happens in the big end of town. And I think all that the big end of town is a larger business. They have chief financial officers full time. I was one of them. You can provide, though, a part-time service. to your SME clients to help them grow up this ladder. So daily, it's really key performance indicator type information. Weekly, performance reports, profitability estimates, very important for each individual business activity. And then we move into monthly, individual business unit profit and loss account, comparison of budget versus actual for each business unit, the balance sheet analysis, key performance indicators and business metrics reports, the cash flow analysis. Where are we going cash-wise? Are debtors building up? Do inventories have to be higher because we're having problem getting material from our traditional suppliers that are somewhere in the Middle East or in Europe, and because of the wars, supply difficulties are becoming a big headache for your clients. So they may have to go to another market, but where is that other market? It might be in South America, might be over in Brazil or Argentina. So they've got a very long journey, haven't they, to get that product around. What's that going to do to the finance position? And then the financial report that would go to the board of directors or the board of advice, key performance indicators, analysis of financial performance, identification of potential funding shortfall, and then a report on the strategies that could be implemented to offset the funding shortfall, capital raising, loan funds, some of the things I suggested just a while ago, crowdsource funding, equity raising. I believe that this analysis indicates that the firm offering the virtual CFO service by the delivery of the 52-week business enhancement system is in a strong position to be charging higher charge-out rates than the firm specialising in taxation return preparation, unless that taxation return firm is also offering high-level tax advice. They can then charge a premium. There's no debate with me on that. But can you use this same summary, therefore, to look at your legal firm client that you're advising on what they should be doing, or your architect's firm, or your medical specialist firm that you're advising, who have been very reluctant to even produce a basic outline brochure on what they do with eye surgery or with anything else, so that it's being explained to their patient. So this is some of the work that I think you need to think about when establishing the charge-out rates. So let's now look at the charge-out rates. We have a charge-out rate calculator. And a lot of what I've just been discussing is really determining whether there should be a premium charge over and above the targeted profit that the business has set for the year. But we start off with labour on costs. Now, you know, when I talk to people who've set their own charge-out rates, I get a funny look on a lot of faces when I say, have you got the labour on costs? Oh, what are they? Well, people have forgotten these very important costs that do occur. Annual leave. If they've got shift workers, there's possibly under their award some sort of shift worker allowance they get paid with their annual leave. Holiday pay loading. Do they pay it? Or they may or may not. Statutory holidays, the personal and carers leave, superannuation, 11.5%. Needs to be factored in. Payroll tax, if applicable. But it is building up. I think people should be putting their provision for that figure each year into a account. And sorry, I was on the wrong one there. I was talking about long service leave. Long service leave builds up over in Queensland 10-year period. I think some other states might be a little bit earlier. Training, work care. So you're able to determine the calculation of the labour budget, and it's calculated for each individual classification. So you've got the total labour costs, not only the wages you're paying, but also the on-cost factor. We need to make sure that realistic estimates of productivity percentage have been used for the various classifications of labour. It's no use saying you're going to get 100% productivity if you really know you'll be pushing to get 80%. Use the 80% or perhaps even 78%. Try to get these estimates accurate. What's the targeted income from the sale of labour? That's going to include the total labour cost and the on-cost. It's going to include the targeted profit that's been set, the overhead expenses, but also the premium. If you're agreed that after listening to my discussions on this point, that your client is entitled to charge a premium, again, using the accounting firm as the example, we'll factor in that premium. It might be that instead of maybe the calculation for the rate of return on the business was done at 20%, but you might say, no, we could charge an extra 7% for that. So we're going to use a profitability of 27% on the estimate of what we think this business is worth. It's bringing it into account. So at the end of this process, you end up with the overall fees that will be earned. You can do the proof document. You know what each person's going to produce. And then on a monthly basis, I'm suggesting you receive a report as to what the actual charge out rate calculation worked out based on the productivity of the individual team members to determine whether there's any errors that have crept into it. Maybe calculations were done at 78% for a certain category of employee, and you find through various reasons that's dropped to 70%. Well, let's redo the calculations, run through the charge out calculator again, and make adjustments. You can't pick up what you've already contracted to do, but for the future, you've got a slightly higher charge out rate. So hopefully that will help you look at this exercise of how you can help your clients to have a better control over their charge out rate determinations. And my very strong suggestion is that you make your firm the first client on this process if you are not in the habit of undertaking the type of exercise that I've suggested to you. Oh, just remember, ESS BizTools has a special Biz Aid promotion at present. We are trying to offer individual components of our product packages to accounting firms so that you can then offer those services for that key component to your clients in areas where they really need it. I'm very conscious of the difficulties that many SMEs have got in the marketplace. So we have a special promotion on our professional service fees charge out rate calculator. It's normally part of a larger package that costs you $2,000 to $3,000 per annum to subscribe for. You can subscribe to this package for 12 months for $300 plus GST. And I believe that with every client that you process through that calculator, you will be able to charge a fee of $500 to $1,000 plus GST. If you wish to find out more about that particular offer, please go to our website, www.essbiztools.com.au. I'll say that again, essbiztools.com.essbiztools. Thank you very much. Have a great day. Goodbye. Oh, I think I said that wrong, so we'll go through it again. www.essbiztools.com.au. Sorry for the confusion there. Have a great day. Goodbye.